Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading day thus far. It's been kind of quiet, but we're going to get through the bias chart here in just a second. But I want to talk about just a couple of things really quick. First and foremost, the euro has done a bit of an about face. So, the euro thought we were making some headway here this morning, and we got swatted right back down again. It's interesting because I'd have to imagine there's a lot of stops now that are below these lows, even though I still think we're going lower anyway. I'm just talking from an intraday perspective, because if let's take this hourly chart here for a second, and let's delete what had happened over the last couple hours, right? So, if you're looking at the euro previous to, the last hour and a half, the euro's been building this base. It looks like we were breaking higher out of the base above 119.40. Your natural inclination as a trader is to get long here, put your stops below these lows, right? Intraday. I'm just talking about, like, this is what we would do. Look, big base consolidating, and it's not breaking down. I'm going to get long, and I'm going to put my stops below the 50% retracement. Fast forward a couple hours, and here we are, right? So now we have to realize that stops are at risk. Now, I still think that the 618 is going to be support. So our numbers, I'll just write them down really quick, just because it's just to have them there. Our numbers aren't going to really change, because I think the support's 118.90. That's going to be that 618 retracement, right? If we look at yesterday, 118.90. So nothing's changing, but I'm highlighting what the risk could be today, of a break below these lows. We can attack this support really quick. Everybody's anticipating North America's coming in, buying Aussies, buying Kiwis, buying cable, buying risk. It's happening right now, guys. North American traders are here. Don't worry, the world is saved. If you guys thought that the world was not saved, it's totally saved now. I just added some euro yen short. I forgot I had an order out there. Oh, damn. Euro yen's getting clobbered. Okay. Yeah, I had an ad, and I was like, well, why'd that go off? Is because it's below the breakout point here. That's why. I wanted to get short if we broke through this support back through 130. Wonder what happened. Okay. Sorry, I didn't mean to yawn on you guys. Now, one other thing I wanted to discuss really quick is, let's keep an eye on crude. Crude actually has slid through, intraday support. We are holding right now. Gosh dang, where is it? We are holding support at this 63. I think 63.70 is really key. You can see the dip below 64 held, but we got to watch crude. Crude's not. There's a risk there that we start pulling back. I mean, I know I've kind of talked about it the last couple of days, but let's watch crude if we start breaking through some of these supports here. We got a ways to go, but it's one of those. It'll weigh on the Canadian and Norway a little bit if that is the case. All right, so let's go through the charts. It's pretty quiet, and I expect it to actually be quiet going into tomorrow, to be honest. Maybe we'll see a little bit of position squaring, perhaps, but what's the position squaring going to be? I mean, let's think about that. Do I really want to be short equities going into the Fed, knowing that Powell's going to be as he's going to just continue to be dovish. Irina just in the chat room was saying, I'm not sure which side to take today. Don't take a side, right? If you're unsure today, stand aside. It's the day before the Fed. We should have some clarity tomorrow afternoon, right? I mean, that's in all actuality. So, as Tony just said, neutral is also a position. Yeah, it sure is. So don't force yourself into something, as they would say in battle, wait till you see the whites of their eyes, right? All right, let's talk about the euro. So again, I'm going to reiterate. I think if the euro breaks through support here, I think we may be starting a bear flag, but I wouldn't be too carried away with short euro positions while we're above the 618. So resistance right now. This just intraday. I'm just kind of looking at this. Yeah, I mean, I'll write down 120 again. I don't want to get carried away trying to get too excited about something that, the market that's probably not going to move a whole lot. Right. All right. So there's the euro. Okay. Let's go over to the sterling. So the pound's bounced back quite nicely. Now check this out. So I had this trend line was drawn out from yesterday, right? Overnight, we broke through that trend line, brought in the selling, and then, here we are bouncing back to it. I'm just not going to get terribly excited right now. I think 138 is support. Obviously, the lows are at 138.08. You know, 140 is resistance. I mean, are you guys getting excited about the sterling here? If anything, this is probably a place you want to short the sterling intraday, especially with the euro coming down. Wow, the euro is really selling off right now. I mean, if you are bearish to the euro, you think the euro is going down, you could always take a stab at the sterling right at this moment, because then you can put your stops right above, 139, let's say 139.15. I'm not saying that that's the right trade. I'm just saying that, your risk is defined. But what I'm going to say is basically 138 to 140.15. We're in kind of no man's land right now. So you guys, and then that this is going to be important. Whoops. 137.60 is really key support. Man, I got the yawns today. I actually slept good. I needed more of it, but I actually slept well. But I've got the yawns this morning. It is still, I was still getting up at the 3 o'clock hour, and it's 6 o'clock in the morning here. So bear with me. I'm adjusting to my new sleep schedule. Remember, time change didn't change for the state of Arizona that I'm in. We're one of the few places in the world that doesn't adjust for daylight savings. But I still change. I change. No one else does, So I said no one else in the state. I do. That's what I meant to say. All right, Aussie. So 77 cents still holding. Is this a pennant? I actually had, I have orders to sell the Aussie not too far from where we're at, like in the 80s. I'm trying to get short as we get up closer to 78 cents. I'm going to say that this is probably resistance here, and support is at 77 cents. And what I'm thinking is, let stocks just push one more push up, and do this. And why am I trying to get short there? Because I think we've got this, we're developing a bigger head and shoulder pattern. Okay. Right. That's what I'm thinking there. So I'm going to write 77 to 78 cents. Oh, by the way, this is still bearish while we're below 120. Just forgot to adjust that. Kiwi. Ooh, still probing. Bear flag pattern. Resistance, it means the resistance 38% retracement here at 72.40. Support's at 71 cents, but intraday will be 71.50 and then 71 cents. Okay. Dollar Canadian. So the dollar Canadian continues to probe these lows, but you notice where we're holding. And again, if crude's weak, right, that's going to help the Canadian lower. What we wrote down yesterday was 125.20. That's still valid, right? We wrote that down yesterday, 125.20. The high that we made yesterday was 123.15, 13, 125.13. So what that means today is 125.20 is actually important. Now, in case we break down in this wedge, which is entirely possible, the lower end of the wedge comes in at 124.20. And then we have the 124 levels, the 127% extension just below that. So, I mean, right there. Okay. Swissy. Now let's take a look at yields really quick before we look at the Swissy and the yen. So as you can see, yields are a little weaker this morning. Not a lot, but they are pulling back a bit. Okay. But higher highs, higher lows. This is the 10-year, 30-year, higher highs, higher lows. So yields are trending higher. So that to me means that this pullback that you see in the dollar Swiss is probably a buy. Now, does it mean you buy it here? I don't know. I mean, for me, I'd rather buy it at 92 cents. Like I'd rather it shake out. Like you see this trend line here. I'd rather it just shake out longs. Everybody think, oh shoot, we're going to see a reversal. Then you get long at 92, right? That's the way I think you play it. And I'm not long. And should we get down there, I might consider it. Here, I'll do this. Okay. Resistance is going to be 93.75. I know we wrote that down. So 93.75. We're still bullish. I might get long if we get down to 92 cents. Here's another currency pair that's holding up really well. That big base. You know what? Let me pull up something for you. Bear with me 1 second. Where the hell? Just give me 1 second, guys. I'm trying to find my picture. Here we go. Okay. Wyckoff. Accumulation. I use these every once in a while. I mean, they're not easy to spot, and so it's one of those things that if I see it, it's kind of, for me, it's like a harmonic pattern in a sense, because harmonic patterns aren't as natural to me as they are to like somebody like Andre, right? The Andre, like I can look at harmonic patterns, and every once in a while they pop up, and I go, wow, okay, there it is. I'm glad I see it. But, people like Andre, they just see them naturally, right? So a Wyckoff pattern is very similar. I mean, I see it when I see it, I recognize it, but unless you're out there just scouring the earth for them. And especially in currencies, there's only so many currency pairs. It kind of is one of those things. When I see it, I know it. And this is one of those, I know it. So where are we here in the US dollar, Norwegian krona, Wyckoff accumulation strategy pattern? Where are we right now? We're right here. Let me grab my pen. Right? This is the accumulation, false breakdown, accumulation, then breakout, right? Accumulation, false breakdown, retest, breakout, retest, 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 breakout. Does that make sense? You guys with me? Okay. So now I'm not saying that that's for sure going to happen, but what I am going to tell you is that what I'll be looking for is a break above 865, 870, and then it's on like Donkey Kong, right? Okay. All right. You guys with me? All right. So support. I mean, I'll write down 840. I think it'd be great if we dip below 840. I just don't, I think it's kind of a gift if you get it down there, but 840. Resistance, it's now this trend line here, and these spike highs, that comes in at 851, 852 roughly. All right. Stupid NASDAQ, man. Just NASDAQ's ripping. Dow's pulling back. Seeing a little bit of a reversal of what we saw last week. It's just rotation as far as equities go, so don't get too excited about this. Dollar MEX. So we held 2055. The dip today was at 2055. Our support from yesterday was 2055. Hopefully some of you had some buy orders down there. I didn't because I'm still long, so I didn't, but hopefully you did. And made a quick, 1,000 pips on the, or 900 pips on the dollar MEX. Maybe even, probably like somewhere around there, right? Because that was literally over the last 2 hours. Dipped to 855. Dipped to 855. That's what we wrote down yesterday. And we've bounced from 855 to 865. Congratulations if you got some. Okay. Resistance. So that's going to be the same as yesterday. It's 2105, but which would be great if we can get back up here and make a decision. Intraday, I mean, I'm going to write down a couple levels. I wrote that incorrect. 20. So 2085, 21, 2105. We're in a range there. Dollar yen. So dollar yen's coming off, bringing down like some of these yen pairs, euro yen, Aussie yen, Canadian yen, all those come down. But again, I'm, and this is the edge chart of the day yesterday. Hopefully you guys read that. Support 108.30, resistance. Now here's the thing. This is, you guys should know this because I've talked about it, but I wrote about it yesterday. This is 2015 highs to today, right? So you can see we have possibly a double top, because if we break through 108, well, you guys know 108.20 is like right here. We break through that 108.20 level, then the double top is in play. And then, we drop down to 107.20 109.20. So I think yields have to come down too in order for that to happen. But 109.30 is going to be critical resistance. Let's see, how critical can I make it? That good? Because as I wrote in the chart of the day yesterday, if we break 109.30, I think we see 110 real quick. I mean, like squeezy fast. Like I just squeezed out everybody fast. You know, that's what I think there. Support is at 108.20, and below that would be double top. You know, drives us down to 107.20, 107.30, somewhere down there. Dollar index, waiting for the Fed tomorrow. Same as yesterday, though. I'm gonna write down same as yesterday, which is, if you don't recall, 38% retracement at 91.40 and resistance at 92. Okay. I think I wrote that down yesterday. 92. Yeah. Same stuff. 91.40. 92. And if I thought we were going to break through 92 today, I would write in, 92.50, but I just don't think we're even going to get anywhere close to that today. Well, we might. I mean, who knows? But if we broke 92, then the next resistance is obviously 92.50. Okay. S&P. So here we are at highs. I mean, 4,000. I mean, seems pretty logical to me. Support 39.15. $4,000, and it's bullish. That's it. I don't think we have to dice that up too much. Bitcoin's easy. I don't even have to look at it anymore. 52,500 key support. Resistance is going to be 60,000. If we get back up there, that's probably a good buying opportunity and or selling opportunity, because Bitcoin, frankly, I think it's developing that head and shoulder pattern. So in an ascending wedge. So I think if we can make it up to, well, actually, let's call it 58,000. I think that's better. I think if we can make it up to 58,000, that's a place where you possibly sell it. I have to keep it in a bullish trend, though, while we are above this this trend line. I have to. But I think Bitcoin is at risk. Man, this euro sterling just absolutely turned around and got clobbered. Wow. Just when you think that euro sterling is going higher, look at that. We just look like we're ripping. I mean, we've dropped 60 pips. Damn. I mean, I own some, and that's why I'm like, I'm sitting there going, dang, and it's not a huge position, but still, I was like thinking, oh, look, we're gonna, be making our way up towards 87 pence. That's a 60 pip move down for, I don't know why. I mean, did the UK like?
I think it's the euro losing.
Did they raise interest rates to like 5%? Like while I wasn't looking, what happened?
12%. The euro is looking around against everything, basically.
I mean, it's just crazy. I would like, whoa. I mean, and I have to say, guys, if you guys are in the ForexAnalytix chat room, Amanda picked up the cable like right off of the lows somewhere down here. So she's done really good. I was sleeping. So I wasn't around, but
You always have an excuse, don't you?
Yeah, I was sleeping. I had to sleep. Okay, let me finish it up and then I'll pass it over to you guys. So gold and silver, all right, we're gonna have to wait for tomorrow, but this is same stuff, right? And look, we happen to be right in the middle of the range in silver, which you guys know it's $27, $25, 24.80, 25, 27, same stuff. I don't think we have to get too crazy here. I think if you really want to be a buyer or seller, you do it at the extremes of this range. Like if you really want to sell silver because you're a silver bear, sell it at 27. And if you're a bull and you're like, no, I think silver is going back to 30, great, buy it at 25 or 24.80 if you can. You know, don't why beat yourself up in the middle of this range. Gold, same story. While we're below 1760, you got to stay bearish. That's previous support. Support intraday is at 1700. So stay bearish while you're below 1760. 1760, 1765. All right, bias chart is done. Steve, I hope you enjoyed your time away. Where'd you go?
We went to the house of Jason's godfather.
Nice.
Yeah, they flew a kite because, you know, it's like the tradition for yesterday.
I didn't know that.
Yeah. So they flew a kite as, you know, we were more or less, you know, chilling and discussing.
Oh, good. That's cool. That's awesome. That must have been fun. Yeah, in a month and a half, I'm going to leave the state of Arizona for the very first time since October 2019. And I'm going to go visit a friend in San Diego and stay at his house and take my kids down to the beach. And
nice.
Yeah, he's like, it would be like the equivalent of Jason's godfather. I've known him since we were 10. So, you know, I get to see his son. I haven't seen his son in a couple of years, so it'll be nice. Anyway, all right, guys. Well, enough about me. I'm going to let you guys take over, and I want to thank everybody for your support. I know that like Giannis came in our chat room. He's like, "Did I miss face this morning?" And it's like, dude, I know a lot of people, you know, still struggle with the idea that the U.S. we have time change 2 weeks before Europe.
Yeah.
It really screws up everybody for a couple weeks, but we'll be back to normal soon.
It is extremely annoying. At least I don't understand why they can't coordinate. So at least we have the time change. I mean, during the same day. How hard is it? I
blame Bush Jr. That was his doing. Anyway, all right, guys. Have a good one, and I'll see you guys on the daily roundup, which is in less than 3 hours from now. So,
thank you, Blake.
See you guys.
Thank you, mate.
Okay. Well, we didn't have much from FACE until now. We did get some U.S. data, industrial production, manufacturing production, both missed in a big way. Revision is higher, but overall it wasn't a very good number. But really, like we said before, we're waiting for the Fed. See if we get anything from Mr. J. Powell that's going to move markets in any way.
Let's see. I'm kind of skeptical, but let's see.
Yeah, I agree. Yields are doing nothing. 10 years at 160. Stocks want to rally, but they're not up a lot yet. So the usual, you know, it's a holding pattern until tomorrow, unfortunately. So I don't really have much to say.
I'm still monitoring here in yields. Tell you this potential of an ascending wedge, which would, if it plays out, would imply finally some type of a corrective move lower from here. So, let's see if Powell saying or not saying something can trigger a move like this. Let's see. We do see RSI divergence. We do see momentum loss. We do see a potential ascending wedge here in the 10-year, but we still haven't broken down. So, there is always the chance that this can actually accelerate to the upside, which that is the type of move, as you mentioned earlier, that would probably cause some kind of an upset in the stock market as well, if that second scenario plays out. I mean, if we do get some kind of an acceleration higher in yields instead of a de-escalation, even temporarily. What else?
Big fat nothing, I'm afraid.
Big fat nothing, huh? It's more or less the
Yeah.
same I have to say here. I mean, I just, I wanted to visit here Europound. Blake mentioned it before. The reason I wanted to mention it is because, in my opinion, the area from which we got rejected is not random, because I'm still monitoring this descending channel. And, once again, Europound getting rejected from that channel trend line resistance. As you see, also not random was the area at which it found support. It's a 78.6% fib from that low to that high. So in the short term, Europound remains in a downtrend, although clearly RSI has been diverging, which can happen just for reasons of consolidating. But as long as this channel holds, the short-term trend remains lower, the longer-term trend is more or less non-existent, because you should always like zoom out to to get a general idea of if there is a longer-term trend. Now, what would constitute a big technical development in this market having to do with the bear side would be a break below 8280. You can see why, right? First of all, we haven't traded below that area since 2016. So soon it's going to be 5 years. And you can see that if we break below 8280, that's going to look like a, huge topping pattern, right? Like a rounded top. But until we break through 8280, there is no trend in the longer term charts. There is a trend only in the short term chart, and as I said, that's well defined by this descending channel. Now let me open the chat box and the question box, by the way, so I can have a look at what you want to see. Hi Steve, can you have a look at pound CAD? Just came off SI from the 61.8% daily. Sure, absolutely. Yeah, and we'll have a look at the rest of the pound crosses as well, since we are at it. So pound Aussie, one by one. Pound Aussie, not much. You can see why, right? And I have no idea what's happening here. Meaning, I thought we're going to get one more high at least before we move lower. We did get one more high incrementally, but we did. We retested it, but it's not that we've failed yet, right? So for the time being, this looks like some kind of a consolidation. Now, this type of consolidation can get resolved in either sides, because I don't know if we've topped or not. If we see a push higher, which should come only if we get some risk off, then we should get another leg before lower. Because in my opinion, the big term picture here, this move higher in pound Aussie was corrective. I'm pretty certain that was the high of the correction up there. And this is some type of a bigger consolidation before we resume the move lower. So this is like the medium to long-term outlook. Now, in the short-term outlook, as I said, I think there is still potential and room for one more move to the upside before we go lower. but who knows? For the time being, as you see, we're just chopping around there. Same thing applies with pound kiwi. Pound kiwi clearly didn't form an inverted head and shoulders formation. I think that has already died as an idea. But what remains is the fact that we keep pushing higher, in my opinion, so far in what looks clearly as a corrective pattern. So I think unless we break above this channel, the risk reward favors the downside as well. So both pound Aussie and pound Kiwis rebound looks corrective. Now the question is, having to do with pound CAD, and now coming to your question, having to do with pound CAD, does that also give us an idea about what's happening in pound CAD? And is there a chance that pound CAD has in essence been leading on the way higher and on the way lower? Because as you see, the pound CAD seems to have actually produced an accelerated move to the downside. Now, we've already broken down from like this trend line. Now, I'm not very sure about its importance, and that triangle was also like very random because it was just a speculation. I mean, we didn't have multiple points to pass through the line oppositely from the trend line support, which, as you see, is a much more valid trend line, right? So this might be like a larger consolidation within which we're still moving, since we found that high and then that low in essence in the period that we had the COVID scare in the markets, right? Last year, that is, a year ago. Now, in the short term, we've broken down from this rebound, and we might have more room to run towards this trend line support. But in general, I don't think we have a trend here. Zoom out and get a better idea what I'm saying, right? So, I don't know what your time frame is, but having to do with the time frames I'm looking at, would I actually be trading this? Probably not. Actually, certainly not. Now, I'm assuming the 61.8 you're referring to has to do with this range, I would assume. Yeah, I don't know. I mean, yeah, I just see a triangle in the range, you know what I mean? Nice short-term move lower, and it might have more to go, towards like 169.50. But, not my cup of tea. I wouldn't be trading this. Not unless we see like a bigger breakout. Platinum, IWM, the DAX. Okay, one by one. So, having to do with the metals, we went over them in phase one, and nothing has really changed. So, I don't have much to say, but we didn't have a look at platinum, which, if this is a valid interpretation, what I had here seems to be breaking out. Now, admittedly, right, so it seems to be making a move higher. Now, admittedly, my bias hadn't changed, and we don't have like very nice momentum after breaking higher. But on the other hand, I can't see any other way to interpret the move lower than corrective. So there is still the possibility that this is a more complex correction that has more to unfold. But if it isn't a more complex correction, we've already broken out, and that should point to new highs, right? And one more thing I wanted to show having to do with metals is palladium, because palladium needs a little bit more confirmation, but palladium seems to also be about to break higher. So keep that in mind. I would want to wait for a daily close above, these highs as well. I mean, the November high and the January high. We're already trading above the closes, the daily closes of these days, but it's still early on the day. But Palladium might be actually trying to finish off that corrective move and continue higher. So, Palladium is once again in my radar. And as I said, I want to see how we close the day. And, it might be ready to make the move. Now, having to do with nickel, one more metal that we're looking at here frequently, my thesis hasn't changed here. I think it looks weaker than the rest of the metals. And I think that the recent consolidation looks to be bearish, given the impulsive nature of the move lower. So even if this is a corrective move lower, which I think the longer term view would be that this is a corrective move, I think that this is probably like the first leg of a bigger corrective move, in which case I would be looking for a more, for more downside and perhaps some type of a rebound and then lower again before continuing the bigger trend. So nickel in the short term remains, the outlook remains very bleak. I mean, I think you shouldn't be trying to buy it in the short term. It had a major move higher, but I don't think we're done correcting lower. As simple as that. Having to do with the other questions having to do with IWM and the DAX, let me start from the DAX. So the DAX, as with the Dow Jones, it still looks very bullish, right? I mean, corrective move lower, break higher, corrective move lower, break higher. And even if you look in the shorter term, we seem to have formed like a 3-day corrective move, horizontal corrective move, and we're about to break higher from that as well. So really, there is nothing not bullish about this. We are at all-time highs, by the way, also, just keep that in mind. So there is nothing that's not bullish looking at this chart at the moment. Keep that in mind. Next upside resistance 14,788, the 161.8% extension of this corrective move lower that you see there. And I think it's probably time that we start looking at longer term targets as well by fib extending also the corrective move. There we go. From the COVID pullback. So that would imply, for example, a first target of 15,345, which is the 127% extension of the COVID move lower, right? So 14,788 and then 15,345 next upside targets. Don't forget that when you trade at all-time highs, in essence, the only upside targets you can come up with are either fib extensions or like formation extensions. Like, let's say you have a bull flag, you measure the pole, you extend it by 100%, so on and so forth. So the only type of targets you can get are these type of fib extensions, because you don't have prior price action at these levels to know support resistance areas, or in essence, as we call them, like demand supply areas, right? So admittedly, looking for resistance areas at all-time highs or looking for support areas at all-time lows is, definitely not an exact science, right? It's more like, just having something instead of having nothing. I tend to trust a lot more previous areas of support and resistance as areas that the market is attracted to either stall, reverse, or have any type of worth mentioning event. So but that's all we have in hand, as I said, as a tool, and that's all we can use. In any case, remains bullish until proven otherwise. There is no argument to be made that it's bearish in any way. Now, the IWM, there it is, as you see, doesn't look dissimilar, right? We had a bull flag, we broke higher. Even if we are to see a corrective move lower, there is a very good chance that we might first fulfill the 161.8% extension of this corrective move lower, which comes at 244.6. As you see, and I said it several days earlier, it was looking like, and I think it's more than certain now, that a new high would come with quite a big momentum divergence. You can see how much of a divergence we have here on the daily, right? I mean, we're not even close to overbought territory as we were before, despite being at all-time highs. So pay attention to that. I think that we might extend even higher, as I said, towards the 161.8. But even if we make it to the 161.8, I still think that we will have a very decent RSI divergence to talk about. So in all honesty, this is not the place to be chasing all these markets and all these indices. You know, I just want to remind you that despite of having horrible economic developments having to do with the actual economies, for example, let's say the IWM has rallied, what is it, like 160% in a year, right? And during this rally higher, the 160% rally higher, we haven't seen any proper corrective move. I mean, all the corrective moves we got were very shallow or very short-lived. So, you know, it's more than clear, in my opinion, that if you really want to be a buyer of this market, you need to wait in order for you not to just be FOMO chasing. You need to see a proper corrective move lower first. Until that happens, I think that if you're buying, you know, you're just making a mistake. I mean, you're making a mathematical mistake.
Steve,
yes,
sorry to interrupt. Did you see the Bank of America survey, client survey, where
no, I didn't.
Where they asked, what do you think about equity markets? 15% of the people who asked said that they're in a bubble. I think it was 25% said we're in the very early stages of a big rally. And,
very early stages.
Yeah, and then like
very early.
45%, whatever it said, we're in the late stages of a rally. And so I'm like, wow, incredible.
Yeah, indeed. Incredible indeed. So, you know, don't be chasing these markets. I think there is a very good chance that this is the last leg low higher before a proper corrective move lower. Now, due to all the reasons we've explained again and again and again, and no reason for me to go over them, I think that, you know, whenever we get a proper correction, they're going to step in, you know, they're going to end up making this another buy the dip opportunity. But that doesn't change the fact that you shouldn't be chasing, because in these markets, sell-offs can be really sharp. Even if they last like a couple of weeks only, you can easily see a 20-25% move lower in like 2 weeks, and then you can easily see a full retracement of that move in a month. So yeah, that's what I think about it.
Awesome.
Yeah, I think more or less we covered everything. So
yeah, well done, Steve. That was very good. Once more.
So see you all tomorrow again.
Fed day tomorrow.
Yeah, Fed day. Let's hope for some fireworks. You know, post-Fed.
Yes.
Hopefully, crossing my fingers.
By the way, we have the FX Street webinar in about 1 hour.
I know, mate. I know.
Yeah. Bye-bye.
Is it in an hour or 2 hours?
It's in 1 hour. It's 3,
because
3
they've changed.
GMT.
Yeah, because they've changed. Yeah, because it's in US hours. Yeah. Okay. Bye-bye, guys.
All right. Bye-bye.